Hello investors, welcome to Investor Central. In today's video, we are going to discuss Parag Parikh Flexi Cap Direct Growth Fund and its update for the last 6 months as well. Today's date is 25th February 2025 and the benchmark for Parag Parikh Flexi Cap Fund Direct Growth is BSE 500. First, I want to show you the performance of the fund for the last 6 months, friends. So in the last 6 months, the benchmark has fallen minus 12.59%, but this fund has fallen only 1%. That is 0.99% to be precise. We'll see the reason why this fund has fallen very low when compared to its benchmark. And its category average also, if we see, minus 12.77% is the fall in the 6 months, in the last 6 months. So you can understand the performance of this fund by this detail itself. Coming to the risk measures of this fund, 3-year alpha of this fund is 6.03%, which is good. 3-year beta is 0.68%, which is again good. R squared, the relationship with the benchmark, is only 77.84%. Information ratio is 0.65, which is decent, and Sharpe ratio is 1.08, decent, and standard deviation is 10.68 only, friends, so which is extremely good. So this fund has low standard deviation. Normally Nifty will have a standard deviation of about 12%, Nifty 50 I'm talking about, but this fund has very low standard deviation as well. Coming to stocks asset allocation, this fund has 79.13% allocation to stocks. Coming to cash holdings, as of now 20% is in cash now, and bonds, which is just parked, is 0.59%, and this portfolio is completely a large cap portfolio. Most of the stocks in this folio are large caps. Giant companies are 81.04%. Large companies are 15.74, while mid-size companies are 2.95. And this fund has very low exposure to small caps with 0.3% only. Still, this fund is able to have positive alpha with when compared with the S&P BSE 500 as well, friends. Now coming to stocks, HDFC Bank, Bajaj Holdings, Power Grid, Coal India, ITC are the top 5 stocks, and the top 10 stocks weightage in this fund is 53.14%. Total stocks in this portfolio are 95 stocks are there, which is widely diversified. And coming to the sectors, financial services is the top with 38% exposure approximately, and consumer cyclicals is at 14.9, followed by technology, communication services, energy, consumer defensive, utilities, healthcare sectors. Now coming to regional exposure, geographical exposure, this fund has allocation to US stocks at 17.03%, which means we can say the fund is geographically diversified as well. So that is the reason, friends, why the index has fell 12.59%, but this fund has fell only 1%, because this fund has a geographically diverse exposure. So thereby, if the Indian stocks fall, US stocks, if the holded US stocks rise, the fund will give positive performance. That's why the result is only minus 0.99% is the fall in this fund when the benchmarks are falling heavily. Hope you have understood the point. And coming to inception basic details of this fund, inception date is in 2013. Rajiv Thakkar is the fund manager since beginning of this fund. NAV of this fund is 84.56. In the last videos we are doing on Parag Parikh Flexi Cap Fund Direct Growth, 70 was the NAV last year January. So almost 20% return was given by this fund. And AUM, this fund has huge AUM with 89,703 crores. And this fund has different exit load structure as we have discussed it before. 2% is the exit load for the first 1 year, and in the second year the exit load is 1%. So this fund has exit load for 2 years. This is a little bit different from other funds apart from holding structure also. Expense ratio of this fund is 0.63%. So which is decent for a direct growth fund, direct fund. So this is the structure and details of the Parag Parikh Flexi Cap Fund. Hope you have understood the performance ability of the Parag Parikh Flexi Cap Fund as well. Before investing in this fund, please do reach your advisor once. The only thing is this fund has 100% equity allocation. Who are looking for balanced approach can have a separate debt fund in their portfolio to manage their equity risk. So that's why you have to understand your risk profile also. That's why reach your advisor before investing. Thank you very much. Please do like the video, share and subscribe. Thank you. Bye.